Hey everybody, I was going to take a little bit of time today. A friend of mine who is a financial advisor actually for me and my wife last couple of years, really been helping us. He gave me this sheet and I'm going to upload it to Teachable so you guys can see that. But I want to do a quick little video. I'm just sitting outside here. And basically just his top 10 steps to gaining financial security. There's tons of advice out there. Not here to replace any of that, and especially the things that I've had to learn the hard way. But I thought for sure for this little video, you guys might like this. As far as a restoration company, building a company, some of the places that I succeeded, some of the places I made mistakes at. Yeah, it says top 5 don'ts, okay? Don't get into debt. Now, of course, there's the home education business, and of course, we do have certain things where you go, okay, I'm gonna do a starter package or get going. But I can say this from experience. You know, we started our business with an SBA loan, worked really hard to get that paid off in 13 months, was able to get the collateral off, and it was a success, okay? But I almost think I paid it off so fast that I just thought I could always pay everything off. And that's when I started really growing by, you know, $400,000, $500,000 a year, 1 or 2 more trucks, to the point where 06, 07 comes around for carpet cleaning business, and we had 14 trucks and the economy hits. And so, you know, I definitely had to learn the hard way that growing slower, with less debt, paying as you go, is a lot better way to do it. And it's the way we've done it now. So definitely not trying to say don't get into debt at all, but be really careful. I like this on here, number 4. I'm going to skip down to that because it kind of goes with that thought. He says, don't risk more than you're willing to lose. And sometimes we get so caught up in, oh, there's a big freeze, or there's a hurricane, or there's, tons of work right now. And we go, I don't want to miss out on that work. I don't want to say no on the phone calls. And I ran into that, and I would run out and get another $100,000 worth of equipment and loans and things like that. And eventually, you know, weeks later, months later, that work would slow down. And so now you either had that inventory, or you had that debt that you had to pay off. So just really being very careful at the pace that you take it. You know, take some, pay it off, take some, pay it off. Don't covet or judge is number 2 on this list. I really like that because it's easy. I was a franchise and I was an independent. And it's easy to look around and say, oh, that business is building, or that business has better trucks or more equipment or more staff. Don't get caught up in that at all. I mean, we learned how to make more profits. Remember, for me, it's all about profits. What goes into your bank account, what helps your business and your family long term is to, sorry, someone keeps tagging me on there, but it's more about what you're going to build long-term and stability. And I like this. He said financial security for you as a business owner. So as you're getting into this, be very careful and get lots of advice, get lots of people to give you ideas of where they've been, what happened to them. But yeah, just don't get caught up on so-and-so's business is bigger than mine or stuff like that. It's not going to help you make the right decisions. Don't mistake wants for needs. Man, there's always that next thing. There's always one more thing. There's always one more opportunity. Be really, really careful not to track down and get caught up in the gaining of one more job, one more territory, one more account, that you sacrifice what you have going on right now. Be charitable is number 5. Don't be a lender. You know, these people that are constantly, and someone would call me up and say, hey, Greg, I've got issues. I've got financial problems. Can you help me? And man, I wanted to help them. I remember one time I had a friend of mine who had a business and they were really struggling. I took out a credit card to help this person with their business. And I thought later on, I was like, why? I just thought I had to help them. But now I have a credit card that's $6,000 or whatever it was on this, and I'm trying to help someone with their business. It wasn't a smart thing to do. It went on and never really got resolved completely, besides me paying the remaining balance. So it didn't help. So be careful. I like this. He says, a fool and his money are easily separated. So don't be stingent. Don't be, don't keep it all. But also be careful and be charitable. Find out who you want to help. Now, his top 5 do's, and I think all of you can take this one a little different. His top one is, it says, pay the Lord first, and that's tithings. And you hear that from a lot of good, sound financial advisors out there, to give back. Okay, give back to your tithings or to your local church, or maybe it's just a charitable contribution that you like, a group that you want to get a hold of. I'm really big on that one. Pay yourself, he says, 10 to 20% long-term savings, 401ks, IRAs, etc. man, I would do this really, really good, and then some opportunity would come up, and then I would screw up, and I would get rid of my nest egg and things like that. Had to learn it over and over again. But the last 3 or 4 or 5 years have been, 4 years have been extremely solid, of growing back up and getting those things. And I've had lots of people call me and ask me for opportunities. Hey, come help us build this school, or help us do this, or hey, help me do this, and I'll pay. And I've just learned that the consistent, steady percentages of paying yourself. There's also a book that I really like that I recommend out there called Profit First. If you guys haven't heard of it, his name's Mike. I can't pronounce his last name. He even kind of makes fun of it on his website, but look up Profit First. Great book. Some of my clients have really benefited it. And I actually run our finances on a monthly, weekly basis, a lot based off of Profit First. Loved that one. Live within your means. This is what he's talking about. Of course, just spend less than you earn, budget, and have an emergency fund. I'm a big fan of this, and this goes into Profit First as well, is separate stuff out, especially like say you're going to buy equipment or you want to buy a new truck, start putting that money away so that when that big freeze comes, you're not going out and taking another loan out, but you have 10, 15, 20, $50,000 set aside as that emergency fund. And it's going to get slow. You might have big jobs that take a while to get the billing done, but you have to pay for all the labor and the supplies up front. So I learned this from my business partner, Steve Sisney. He said to me when he took over our water damage company, he said, Greg, I want to have at least 2 months of all of our salaries and everything saved in an account that we can't touch. And learned that very good sound principle from him. And I know he based his life off of that later and has done extremely well with his companies. Number 4, he's got here, have proper life insurance, life, disability, health, home, auto, things like that. Don't go skimpy on your insurance. Especially if you've got employees and things like that, make sure you've got the workers' comp, all the things that you need set up. At number 5 on here, he puts have a will or a trust. And so I think once you get to the point where you have the assets and you have your items in place, and I think also if you start by just putting those numbers in as a regular basis, it will help you to spend less and save more. We try to teach this to our children here at our house, and our older kids that we've started doing this with, actually even the younger children. But I noticed my 2 oldest daughters the other day said, man, Dad, since we started writing down how much we have on each account and how much we made and how much we increased our savings by or our school fund for, it's helped them to spend less because they can see themselves being accountable for those numbers and realize how much they're working for that money. So just wanted to give you guys a quick video here to help you understand this, why I've got this top 5 do's and don'ts. Really simple sound, but as a restoration building company, be really careful. What I always say when you're going to buy, like, say, specialty drying equipment is, like, you'll hear me say this all the time, buy one heater. Make sure you're using it. Make sure you know how to bill for it. And once you've paid for that heater in rental days, then go buy a second one. Okay, wall cavity dryers, air scrubbers, the same thing. Don't go buy a bunch of stuff that's just going to sit on the shelves that you're never going to use and hope to make money. Don't go buy that truck that's just going to sit there. Okay, make sure you have enough days of the month or the year that you're going to be able to profit from that piece of equipment. So hopefully this was helpful for those of you who are in the new owners course, and just even old owners that have been going on. It took me a couple of rounds to figure out these things, but since I've done a lot better on following these do's and don'ts, and this is Paul Mathewson who gave this to me. I'll give you his contact information here in Teachable. If you'd like to contact him, he said he would be more than happy to work with any of my clients that are in need of a financial advisor to help them put things like this in place for their own business. But I remember at the end of the day, don't just get everybody else paid. You need to make sure that you, the owner, and I say this all the time, I'm going to say it again and make this a little bit longer, but I was the guy who was cleaning 700 carpet cleaning houses a month. Everybody else was getting paid, and I wasn't making money. So we learned I was a slow learner. It took me a couple times to realize that bigger was not always better. And if you're profitable at 1 truck, profitable at 2 trucks, profitable at 3 trucks, then you're going to be even that much more profitable at 10. But hopefully you guys can learn from my mistakes on this and successes, and see that you sleep at night so much better when you do stuff in a process that takes time. So hope you've enjoyed, and keep going down the courses here for the new owners, and get some additional help. If you need help, give me a call on the number on our website, Thanks.